Coming up on the SBS On The Money podcast, Foxtel sold for $3.4 billion. The ASX fixes its chess issue for now, and the ASX and markets in 2025, what to look out for. That's all next. Hi everyone, it's your daily 10-minute business and finance news wrap for this Monday, the 23rd of December 2024. The Australian share market rose today, bouncing back from some heavy losses on Thursday and Friday. We'll have the details with Kyle Rodda from capital.com. But first, there are fears Australia's local television production industry will be hit after the sale of subscription television business Foxtel to a British-based streaming platform. The $3.4 billion deal will see global sports streaming service DAZN by the broadcaster from News Corp and Telstra. Now, DAZN says it isn't planning to make any changes to Foxtel's products or services post-acquisition, and it's still too early to comment on the plans for the business long term. So for more, I spoke with media commentator James Manning. James, first of all, why is Foxtel being sold?
Well, News Corp sort of telegraphed earlier this year that they wanted to divest themselves of the Foxtel business. It seems to have been a long-term strategy. They wanted to float the business a few years ago, but because of the changing business models in the subscription TV and streaming world, that didn't happen. So they had to re-engineer the business as a streaming platform, which they seem to have done quite successfully. And now they've, found a buyer.
How successful has Foxtel been lately? I took a quick look at its latest results from about August, where it showed that overall subscriber numbers have risen by just 1%. But I think streaming makes around 70% of those subscriber growth, right? And when you break it down even more, even though its binge unit has seen subscribers grow by just 1%, KO Sports up 14%. So what does that tell you about the future of this type of business and where the viewers are?
Yeah, look, long term, there's lots of questions about this business model. Is it sustainable? The old Foxtel customer used to spend between $80 and $100 a month. The new customer can spend $10, $25. So they're getting more subscribers, but they're spending a lot less. So the costs have had to come down. How that will be maintained long term is anybody's guess.
Okay, so what do you know of the buyer? Because I think it's a British streamer called DAZN.
Yeah, correct. Yeah, look, DAZN, sports only, and in Australia, it's on the fringes. You can watch some NFL, you can watch a bit of British basketball. So they're really specialist niche audiences, and this is giving DAZN a chance to get into the big time, at least in Australia. I mean, how much will this travel for their international business? Well, not at all to start with, because they won't have rights. But, could there be, would they be looking at getting some of the cricket deals when they're up again? Might they want some global rights? Perhaps. Australian football, very niche sport outside of Australia, Australian rules. But so, a big player, but still mainly focused in Australia.
So how do you think this will likely change the media landscape here? And what are the concerns? I mean, I know it's a double-barreled question, but if they're focusing on sports, what does this mean for local production in lifestyle or drama, for example?
Yeah, look, it's Foxtel has been dropping its costs in non-sports related content because the way to secure audiences in the last couple of years has been to get live sport. That's the real magnet. So that's been the focus, less focus on local productions, which still get them a good audience, but it's just not as dynamic in terms of dragging in revenue. So there's a real question mark about if that will happen. You can expect some consolidation in the whole streaming subscription space. There's lots of players now. Max will be launching next year, Disney Plus, Prime, Paramount Plus, big players that are building substantial businesses here. Will there be room for something like Binge, which is Foxtel's non-sport offering? It'd be very surprising if that stayed as it is now. Look, it's $10 a month entry fee. It's not earning big dollars. So there's a real chance to sell those subscribers perhaps to an existing streaming platform.
So do you think local production companies, producers, actors would be potentially worried about this deal? Could there be less work for them?
Yeah. Look, I think they could. We've just seen a report about the hours of commissioned drama in Australia, and the free-to-air platforms only got 4 productions in the last year between them. There was more on the streaming platforms, but they're all business models which are really untested over long term. So, will those platforms continue to spend on Australian drama? And mind you, there's no content requirements on any of them to keep doing that. So I think we could expect to see a significant pullback in the short term.
And what do you think this finally means for Telstra and News Corp?
Well, for Telstra, it lets them get out of the Foxtel business where it's been a minor shareholder. They're now a majority shareholder in Fetch TV. So we might see a new focus on that business. And they can put their energies into sort of, getting their very big Telstra mobile and broadband customer base, selling the Fetch TV business to them. So expect to see some more of that. For News Corp, they'll be able to focus on what they see as their growth areas. I mean, they'll stay in traditional news, very much Australia and the UK, but the Dow Jones business they see as lots of upside there, which of course is the Wall Street Journal in the US. It's digital real estate services, which is REA in Australia. They've been unsuccessful bidder for some expansion overseas, and also book publishing. Who would have thought books would still be a thing, right? As the world digitizes, but HarperCollins, a very successful arm of News Corp.
That is James Manning there, media commentator.
Now, Market Day on the SBS On the Money podcast.
A great day for the Australian share market. The S&P ASX 200 up 1.7%. Don't forget the market saw some pretty big falls on Thursday and Friday. For more, I spoke with Capital.com market analyst Kyle Rodda, but first asked him for his market reaction to the Foxtel deal. Kyle, first of all, how did investors react to the Foxtel sale?
Yeah, broadly positively. We saw News Corp shares up a couple of percent and Telstra shares up by about 0.5%. So roughly in line with the market. Certainly News Corp a little bit stronger. I think the overall sense is just a little bit of relief that, both companies, but especially News Corp, have been able to offload the asset to a willing buyer and at a reasonable price. It's a very expensive part of their business. It was a business that was struggling to compete and generate sales, especially with the streaming revolution of the last decade or so. So now they can really clear that sort of asset off their books, get some deep, reasonable value for it, and then obviously they can now decide whether they sort of reinvest that elsewhere or deliver the returns to shareholders. So overall, it's already probably slightly priced in. Again, not surprising, but certainly I think again it was a bit of a sigh of relief for a lot of investors in both Telstra and News Corp.
Okay, let's look at the broader market, which has really bounced back quite strongly today after 2 days of pretty heavy losses on Thursday and Friday. Why?
Effectively, it's the US inflation data that we got on Friday night. I mean, the narrative around the FOMC decision, which sparked this sell-off in global equities, was that maybe the Fed would have to cut or won't be able to cut quite as much as previously expected, both because of, stubborn inflation and strong economic activity that we've seen recently, but also, coming down the pipeline, potential inflationary pressures from, tariffs and tax cuts under the incoming Trump administration. This inflation data was really quite important because if it came in higher than expected, all of a sudden that kind of only 1.5 rate cuts that the markets were pricing in after the Fed decision could have been reduced. Again, that could have hit equity prices at a time where valuations were already sort of stretched. Investors were getting a little bit nervous. So the fact that we saw that come in a bit lower than expected, the market's now easing back towards the notion of 2 cuts from the Fed next year, basically boosted Wall Street, that boosted local equities and sparked the recovery that we saw today.
Can we focus on the issues that the exchange operators is having at the moment? On Friday, issues with its CHESS settlement system, which meant any trades meant to be settled on Friday, 2 days after the transaction, was delayed until today. Firstly, from my understanding too, the ASX says it's fixed it. Firstly, did it impact you? And how serious is this issue? Can you put it into context?
Fortunately, it didn't impact us. Had the situation not been resolved pretty much at the 11th hour, as we understand it, it would have been quite problematic because all of a sudden it pretty much would have stopped our clients from being able to trade and execute trades. Certainly, it would have stopped us from being able to manage the risk on our books as well. The broader issue here, though, is something of a crisis of confidence in the ASX as an exchange, especially after the CHESS debacle over the last few years, where effectively and arguably investors were somewhat led down the garden path when it came to how this system was being sort of implemented, executed, and when it would be up and running, to subsequently being pulled entirely and realizing it was a big, wasteful, endeavor that cost a lot of money and a lot of time. So, really what we're seeing here is another example, perhaps, of the operational shortcomings of the ASX. The concern that, of course, given that it has pretty much monopoly power in the market, that there really isn't that much alternative but to deal with a business that isn't really up to grade at this point in time. Had they not gone live today and the market had not opened effectively or at least fully, there could have been really serious ramifications for Australian investors, and that crisis of confidence would have even been worse. So it really just again reinstills that kind of nervousness that a lot of people have about the ASX's ability to do its job.
And finally, if we look at the crystal ball for 2025, given this is the last time I'll speak to you this year, where do you see the opportunities for investors?
Well, I mean, I think it's a little bit a nervous time right now because, again, we're going into a fairly uncertain interest rate environment and questions about whether valuations are stretched. And a lot of the sell-off that we've seen over the last few days is really on the basis that, potentially we're starting to see stock prices come back to reflect, fairer fundamentals. So first, we have to get past that sort of interest rate question. There is the argument that maybe equities are a little bit too rich, more broadly speaking. From a strategic perspective, though, if we continue to see inflation pressures moderate, especially in the United States, maybe tariffs aren't as implemented or implemented as widely as feared by the Trump administration, and some of these tax cuts come through and boost corporate earnings, we can potentially see equities continue to run higher. We might start to see a little bit of a catch up in some of those cyclical names that have underperformed those big tech companies that have led Wall Street higher and have outperformed this year. And maybe that kind of breadth can continue to push the market higher. So, some of those undervalued areas of the market like materials, again, those other cyclical names may be able to perform strongly. But it's a very interesting setup going into the new year. January often determines the course for the rest of the year. So if investors can still have that sort of level of confidence in earnings going forward, maybe we'll continue the rally, but it all very much depends on that kind of interest rate story, and underpinning that is obviously inflation as well.
That is Kyle Rodda there from capital.com. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.